Good morning. Hello, good morning, welcome. Just a moment, trying to inform others that we are online. We're live now, so just hold on for a few moments. Please let me know if you can hear me. Just let me know in the comment section if you can hear my voice loud and clear. All right, all right, all right. Okay, thank you. All right, so welcome to our Tuesday live class. I wasn't available for last week class, but I was very certain that I left you guys in good hands. And you guys know how we do it here. Basically, we go live to analyze the market at its current condition to see what the market is doing, to look for possible projected entries and get clear market outlook. Today is Tuesday. The market is pretty much settled, so obviously we can begin to scout for good setups in the market. If we have something that is right at our front, it is something that it resonates with you. You must not take every setup that I put out there. Some people don't trade every pair. There are some specific pairs that they trade. I could help you check out the pairs. And you don't necessarily have to trade everything, just what resonates with you and what you feel comfortable trading. Not because it's coming from me, but you're watching how I analyze my chart just helps you understand how deep you can also go in on your own personal analysis as well. Right. So we're not going to waste much time. We're going to go straight to the point. I have one or two pairs that I'm looking at. Um, and then I will also take some pairs from you guys as well. So someone sent me help asked me to help him look at what they call it silver. You guys know I don't really trade silver that much. I trade gold, but I don't really trade silver. But I was checking it out and I wanted to put it out. It was not the first pair I wanted to start with, but because he asked me to check it out for him, this was my one-on-one student. So when I checked it out, I realized that the market was already, I think, I don't know, he should already be in profit because he kind of like wanted to take the trade very early today. So I'm going to share that with you guys and then give you guys my. Let's start with that one. Basically, that's what I mean. Yeah, we're going to start with that and then we're going to go into the major pairs that I'm looking at. Then we'll also take yours as well. All right, so I will share my screen now on XAU US XAG. Okay, please let me know if you can see my screen. Let me know if you guys can see my screen. So I'm currently sharing silver. I'm currently sharing silver. Please let me know if you can see my screen here. All right, thank you, Ikichuku. Thank you, Elvis. Appreciate that. Appreciate that. All right. So this is silver. I'm gonna do the same thing I did with him, just a rundown of like a top-down analysis on this, and show you guys what I'm expecting and what I'm looking at, right? So if we start, okay, let's start from the daily time frame, basically, the daily time frame. So from the daily time frame, what I like to do is first of all just look at the structure, right? The overall structure, the trend, and the dynamics of how the market is building up. So you can see clearly here that the market is bullish, very much bullish, but it's in a massive retracement. We have this practical break of structure here on the daily time frame, and this is a very valid area of interest where market has come to, mitigate. And you can see this rejection candle, right? So we have had the massive fall to the downside. I think the same thing, this pair is actually very similar to the movement is similar to that of gold, right? And you can see the massive drop. And this was the same thing that happened last on gold as well. We had a very massive drop on gold. That happened last week, Friday. And this is the same thing happening on silver. So this market has come to this area of interest right here and is reacting to this area of interest. So this is the daily time frame. Obviously, we're going to go down to lower time frames to look for possible entries because the market has come to an area of significance, a demand area where we'll be looking for entries, right? So on the 4 hour, you can see clearly where the market is, right? So the market has dished into that daily time frame demand zone, mitigated this point right here, and is pushing back up. So at this point, it is still not an area to, you see, when you're trading a pair like silver, gold, you should always remember that higher time frames are just for directional confirmations. Unlike other pairs that you can still trade higher time frames. If you want to trade higher time frames on this kind of pair, your account balance should be massive, like really massive, because the pip count is going to be crazy. So you're going to try as much as possible to refine your entries, refine, so that you get smaller entries to be able to scale up properly, right? So here, I can reduce this now, bring it down to this point. This is the zone, the last zone here that we're seeing, and market has slightly touched into that zone, right? And so this is more like a partial mitigation, right? So I'm still going to drop down because this mitigation gave rise to about three kind of rejection. If I open this closely, you see one rejection, two rejection, three rejection. And rejections in areas of interest are very powerful. My students, you guys can totally relate, I'm sure. And then now it has, after this rejection, it has pushed up, then drop back for a pullback. So let us see what the 2 hour time frame is looking like. Now on the 2 hour time frame, we can now see a little bit of a clearer structure. Now there is more like a little internal change of character here where market did this, broke above this, right? Also, I didn't get that. Could you try again? Oh no, Siri, keep quiet. And also broke above this, another break of structure, right, to the upside. Okay, let me make sure that you guys are following. All right, so now we have an order block area of interest here, and this order block was not fully mitigated until you see how price came here and dished into this order block again. So let us now look at it on a much lower time frame to get a clearer picture, because now there's one area of interest, there's another area of interest below it right here. So let's go down to the 1 hour to see which is clearer, right? So yeah, on the 1 hour time frame, we have this market is reacting to this particular area, and then I also have this area of interest right here, and I believe it also serves the same purpose here on silver, right? So this is the time frame that I like to wait for entries for gold. So let me pretend that this is gold as well, because they are very similar. So 1 hour we have this. Now the market is reacting to this particular area, which is the place that my student wanted to take his trade from, and down again to 30 minutes, you see it a lot clearer. So from the 30 minutes, you have this. Yes, this is going to be your liquidity. Let me explain something here. This is going to be your liquidity point, and you see market came, serve this liquidity, and it's reacting here. However, because of what I'm seeing on the 1 hour time frame, I'm not certain on using this particular area of interest as a POI to buy, right? Because of this 1 hour order block. This order block was not fully mitigated. It did not even touch it well, and you could call this a partial mitigation. So this point becomes a clearer area for me to wait for price, because these other entries are probably going to serve as liquidity for this movement. So people that try to buy in here probably get mitigated and liquidated out for what the buy here. So it's not like the buy may not happen here. It could possibly push from here. But am I comfortable entering the buy from there? No, I'm not comfortable entering the buy from here. Although the market is clearly rejecting, so there's a high possibility that this market can, reverse from here. But I would still prefer to wait for what a much deeper retracement and a much clearer order block so that I'll be more comfortable to sit on a buy from this zone. So from this particular zone, I will still break it down again 30 minutes to see if I'm going to get something clear. So I'm not seeing anything clearer. So this is the last point for me, and this is the point I'm going to wait for this market to come to, right? So this is my preferred area of interest rather than using this particular zone right here. If you come to 15 minutes, yeah, so this is it. This place has been properly mitigated on 15 minutes, right? So if you are in for an aggressive entry, if you're trading what they call it, bit silver, and you want to go aggressive, then you might want to join in from here. But if you want to be conservative like me, you're going to wait for price to drop down into this zone before you take your buy. All right, before you take your buy, and then you put your stop loss right in here, and then your TP can be way into the next high, right? This order block point around here. So this is what I have on silver. So if you're aggressive, you want to jump in. If you jump in here, I will still say no matter how aggressive you are, put your stop loss just below the structure, right? But that's if you want to be. This is going to give you like a 1:2. But if you're patient, you just want to cool down and wait, because at the end of the day, patience always, serves better. Because trust me, I'm speaking from experience. It's better you miss some kind of entries in when you're trying to be aggressive than, you know, you jump in and then the market gives you a roller coaster of, up and down before you know SL is hit. So this is my take on silver. I'm going to wait for price to jump in here. And then I'm going to move to gold now so that I can explain that, because they're very similar right now. Yeah, it looks like an inducement, yeah. Yeah, so you want to avoid that actually. All right, so let's quickly go to XAU USD. So I think I already dropped this. I'll switch to XAU now, please. I hope you guys are with me. I'm on XAU gold. Okay, so I already dropped this setup or on the Telegram, right? For this gold buy. Did I? I think I did. I'm not sure. Yeah, I did that yesterday. I dropped this setup on Telegram. So let me explain why I'm taking this setup, right? So let's first of all hide this so that we can get the explanation from bottom. Now let's go to the daily time frame. So this is gold, right? And then what do we have here? Clearly, there was a time I was selling gold from here. I think I dropped that. I don't know if it's just the VIP student. I think it was in class I explained this, where I was selling from around this area, and my target was to meet to sell down to this order block area of interest here. But then again, the market, I got I got not I didn't get stopped out. I actually took out profit because I could not hold anymore. The market started ranging somewhere around here, so I just closed out my trade. And at the end of the day, the market came and mitigated, right? Straight to TP, but I didn't hold to TP. So now we had this push up. So you can see market has been reacting to this particular demand zone. And this demand zone is very strong because before this market moved out of here, there was a double bottom and like a deep range around here before this market moved. So this is a very strong demand. Now, when the market came back, when the market actually mitigated it, it moved away, right? And now market came back down to that demand zone again and did something that is kind of it did a very sweet liquidity sweep, which I want to show you guys here. But before I show you that, let us get it clear on what the market did on the daily time frame so that you understand what it did on the higher time frame. on the lower time frame rather. So you see, this is the low, right? So this is now serving as a liquidity point because there was still inner areas that this market did not mitigate. Then what do we have here? You see how this market slammed down and swept this low, taking out this liquidity and then start a massive rejection. So we might have two things might happen here. It's either we're going to get a pullback for a sell continuation or a pullback that will determine price moving, resuming the bullish move. Either way, we still have a bullish move on a lower time frame. I don't know if that makes sense. Now, if you look at it from this angle, the market did a what? A an impulsive move or a correction. Either way, there was a massive move to the downside. So therefore, there will be cause for a what? A retracement. So what we're seeing here is a sweep of liquidity. And most times when the market wants to move radically, it will sweep liquidity before it moves, right? So you can see this sweep right here. So like I said, either way, either this is going to be a correction or a full impulsive move, there's going to be a buy. So what do we do now? We have to look for how to join in on that buy, right? So we drop down to the 4 hour time frame. Now, from the 4 hour time frame, I was in a buy last week here and I got out of the trade because it was Friday. And then finally, normally Fridays, when Fridays happen like this, the market can easily, take out liquidity the next day or open with a massive gap. But this time it did what? It clearly swept this liquidity right here. So you see this line, right? Swept out this low. And when we have this liquidity sweep, this is when the market is usually ready to, pump up, right? To move up, either sweeping liquidity from the downside or from the upside. Let me show you another example of what that means. You can see one here, right? When market cleaned out this liquidity. Let me just hide it. You see this one here. As the market swept this liquidity here, it was a massive drop, right? You see it right here, the same thing. When it swept this high, it dropped massively. So this is one of the reasons why, when you spot something like this and it is on a support or resistance area, it just tells that the market, yes, will definitely move in that direction. So now our job is to find entries to follow up on this buy. Now this buy has been accumulating here since on Friday. And when it starts moving, trust me, the movement is going to be massive. You know how gold moves now. So if we break it down to lower time frames now, aggressive entries can want to jump in on this buy now and all of that because the market has done another kind of move, right? Let me pick till I'm on class. So now you can see this sell. It did something like the AMD move, something like this. When the market accumulates, then sells to sweep liquidity and then push back into the structure, and then from here we want to see a continuation, right? That's exactly what this did here. So let me break this down. You can see the candle, the sell, and then push back into the structure. So we're expecting a buy. So some other chart pattern traders will see this as like a head and shoulder pattern. That's why the market is almost the same thing, anyhow you look at it, right? So now we're trying to get entries, right? So you see how the market has been pushing up. So it has broken structure here on lower time frame, broken structure here again. And now all of this, I'm seeing it as what? My liquidity being accumulated for my entry points, right? Now, this morning, someone also sent me this. The same person that my student sent me this, right? This order block. Wow, he wants to join in from this order block. I always say this, not every order block is a valid order block. Some order blocks are meant to serve as liquidity. They're meant to make you feel like, this is a good place to buy because you're obviously seeing the order block there, but they are also going to be like what? A liquidity to take you out, take your money, and then the market moves in your direction at the same time. So how I just navigate my way around this is, even if I'm seeing that order block there, as long as I'm seeing my clearer entry below that order block, the other one above just becomes a mystery, a liquidity mystery. So look at it here. On 30 minutes is where you're going to have the clear setup, right? You see here, this is the order block, and above it we have imbalance here. So we have some FVG that market has not come towards close out right here, and then it's giving us what we call a trend line liquidity. So I adjusted it a couple of times before it was here, right? And then it gave us this dip, so I adjusted it down here like this, all in the name of what? Trying to get our entry from this particular zone. So here's the game of patience waiting. Now, people that join in from this order block probably have started seeing some profits. Before you know it, now the market is selling down, right? it might still buy. I don't care. At this point, all I'm just going to do is I have done my homework. I have done my analysis. I would wait. This is where the second part of the trading comes into play, the waiting part, right? So right now, we're just going to adjust, move this a little bit to this side, drop it down like this, and then we'll wait. Most probably, we're going to see this market getting activated maybe during the New York session, I guess. We may not see this action now. We may see this action during the New York session. And you know, when New York opens, I'll prefer that this market really hovers around here. Then the New York session, it will now drop like it wants to sell and then starts buying. Because most times when the New York is opening from 12, from 130, you will have a fake out move, right? The market will move in the opposite direction. Then from two, within that 230, 3, that is when the main direction of the market actually starts. Go and backtest this that I'm talking about. Every New York open, it happens like that when you're trading gold. Just go and check it. You will see that the market, if the market wants to sell, by 130, the market is buying. By 233, the market will start selling. Then just find the area of interest, that mitigation point, and wait. So if I find this, if this market stalls around here now during 130 and then this market start pulling down, I'll be more comfortable even with this buy. So right now, pending order is set. I'm just waiting for this buy to come get activated. Right. So that's that on my gold analysis. Are you guys still with me? Are you guys still with me? Please let me know. Everywhere seems very quiet, so please let me know. Are you guys still with me? All right. Does anybody have a similar setup, or are you already in the buy? Okay. I'm gonna jump into BTC now. I'm gonna jump into BTC now. Share this instead. Okay, so this is BTC. I'm probably going to delete this order. It did not get. I had this order, but I did not get activated. And after reanalyzing the pair, I'm going to delete. Normally, I used to leave my pending orders, even if I don't get activated. Maybe the price will still come back and pick me up. But I'm going to delete this order, and I'll tell you guys why I'm deleting it. And I will just wait for something else. So let's look at BTC from. Let me hide all of this. Then let's look at it. Let's do the top-down analysis. Let's start from the weekly time frame. Now, something very interesting is happening here on the weekly time frame, and this is it. Now, the market is more like in a correction phase or whatever, but this market is going to sell massively. Now, remember I said something like that last year when we had this move from here, from this point. I explained this to my students, this particular sell, right? When you have a sweep, an AMD concept sweep here, the market usually moves drastically. And we're having a minor one around here. In fact, we had one here and we're having another one here. Look at one here again, right? This is some power tip. I'm not supposed to even be giving you guys this, but let me just explain. This is it happening here. This is another one here. This is another one happening now. So the AMD concept is playing out real good here. So for that reason, we're going to see some massive sells. The massive sell could just be this whole retracement move, but either way, we're going to sell good on BTC because this is a weekly time frame. So if we're going to do that now, that means we might have a pullback. We might have a pullback into the 50% of this area. You know how I always use 50% as a psychological level. This market may drop all the way down, or it may give us a pullback into the 50% of this area for the sell to continue, right? So let me now put this into perspective. Now, on the higher time frame, which is the weekly, you can see that there's a clear impulsive move here. Market has broken structure, so it's trying to what? Correct. And then we now have this kind of candlestick pattern, which tells us that this market will definitely correct properly. Like it's going to give us like a deep retracement kind of correction. So we'll be ready to what? Participate in the sales. Now, Let us come down to the daily time frame. On the daily time frame, you can see a clean structure of higher highs, higher lows, higher highs, higher lows. Now you have this higher high here, higher low, higher high. So this is the previous break of structure, and then we are still acting out within this range, within this trading range from this low to this high right here, which is very interesting, right? So if we're having this, what are we basically saying now? The market is supposed to give us an impulsive move, however, right, to the upside. Now remember that on the weekly time frame, we had that AND concept, that's that sweep, right, for market to drop massively. And if you look here, you will see a very nice order block placement around this area, which is around the 50% of what we saw on the daily time frame on the weekly. So let me just put a line here on the 50% of this move. So if I drop a line here, then we'll drop down to the daily and confirm what this line, if this line actually means anything on the daily time frame. Now you see the line here is corresponding with 50% again of this daily order block candle. That's this bearish order block candle. So what am I saying here now? I'm still expecting this market to push up to this point. Then we can now start selling to the downside, because what we're seeing here is a very clean trend line liquidity that the market is ready to take out. All this kind of movement, right? Trend line liquidity that the market is ready to take out. So I'm not going to go deep into that. All I'm just going to say is let's clarify how we're going to get in on the setup. So the reason why I'm trying to buy from this point that you saw me miss that entry was because, I mean, this is the last point of support. This is the low that caused this whole impulsive move, that caused this break of structure. And let me delete this. I beg, it's causing so much problem here. That trade has passed already. So you can see this is the order block, right, that caused this move. And the reason why this is another 50%, so this is a daily time frame order block. But why am I not using the full body of the order block? I'm using 50% so that I can reduce my lot size entry. Because if you're trying to put your stop loss here, the pip count is going to be really massive. You might get your entry and all, but using 50% is usually logical when you have a massive area of POI, right? So we have something like this, a buy. This is the order block, and imagine this is on a 4 hour on daily time frame. This is quite huge. So I'll prefer to use the psychological 50% level, which is here, and then wait for a pullback to come in like this, because it can mitigate from here, push, and it can come down 50% before the move happens. Just helps you to reduce your stop loss. So that's what I did here, but I missed by a very, very tiny bit of pip. Anyway, so we want to get a buy that will push market to this high up to this order block here before we start considering a sell continuation. Remember what we saw on the weekly time frame. Now, to open this more further, we'll go down to the 4 hour time frame. 4 hour, right? So on the 4 hour time frame, this is where we are. The structure does not look really good. However, I already missed this entry now, and what I'm now seeing is that we might just have this market pulling down to this initial zone that we left a long time ago, right? That's the reason why I said I might probably just pull out that my entry and then leave this like this. Market might still come into this zone, or it might step deeper into this area of interest for the buy continuation, because from the daily time frame we are already in a very sweet solid demand zone, a very refined order block demand zone, and market is already giving some sort of restriction. So if this market should push down further, giving us 1, 2, 3 rejections, it is still very proper to take an entry from this zone. So if you break it down to 2 hour time frame, remember these guys are also similar to gold, their movement, right? Now this is where I got down my entry from, this particular order block here that got a partial mitigation, this one right here, a partial mitigation, and I put my entry here, but you see market did not touch, so we're just going to wait and see what happens. So the bottom line for BTC is that I'm still waiting for a buy movement. Why? Because I want to buy up to that 50% area. So remember that line that we drew from the daily time frame, from the weekly to the daily, that we saw both 50% areas. This is that line right here. Let me make it bigger so you can see it properly. This is the line, right? And that line, what do you see it corresponding to? it is very close towards this area of interest, this order block zone. So we might just want to see liquidity engineered around here, mitigation, and then the massive drop. So if that is probably what will happen, we need to find way and join the buys up to this point, because I mean from this point to this point, from about 70k to 80k in BTC is massive, right? So lastly, we're going to wait for that pullback to happen for price to come in here or drop down to this zone. Either of these zones are going to be our what good entry criteria, all the way up here, all the way up here. So I'm going to leave that to your discretion, right? So we'll see how that plays out. We'll see how that plays out. Right. So who has a similar or a very opposite analysis on BTC? Like I said, mine is not the holy grail. Oh. You might have something a lot different, but I mean, me, I'm giving you premium setup. Premium. All right, so this basically about the pairs that I'm looking at for the week. So I'm waiting for BTC to play out. I'm waiting for XAUUSD. For that silver, me, I'm not really a fan of silver like that. But I mean, it is worth it if you want to check it out. Silver, if you want to check silver out, this is it. This is going to be the setup. And then so we have 30 more minutes or 25 minutes. So let's check out. What do you want me to check out for you this week? I've looked at some pairs on currencies that I'm not really seeing much. Have you guys noticed that this month the structure of the market is just crazy, especially for SMC traders? We are not seeing more of our setups like that. The market has just been giving us very rough edges everywhere. All right, USD card. Please lay them down if you want me to check out any pair for you. We're going to start with USD card. GG. I think I have something on GG that I'm also looking at, but let's check out USD card first. Let me hop on USD card. USD card. Where are you? Okay. All right. So the dollar index have been really strong. Since last month, we've been seeing a very strong bullish momentum on USD, on the USD index itself. So all pairs that are fighting USD are beginning to, lose value, because especially from this whole Iran, USA, frat and all of that. So it's really giving US dollar massive strength in pushing up. All right. So obviously USD card will be moving up as well. That's why we'll have other pairs against USD like Euro USD and GBP USD dropping. They're losing value or losing strength against USD. So now from here, I think the last time we did analysis on this, the market has been using this particular area of interest, this last point of support, and massively pushing right to the upside. So we are on a very tight bullish move on USD card, NUSD XXX. And now on the 4-hour time frame, we have created a massive trend line liquidity here. Market has been creating highs and lows, highs, lows, highs, lows, highs, lows. So what are we reacting to? Currently, we're reacting to this area of interest, this POI right here, this order block. And the reaction is passive. Now, the market from the daily time frame has been slightly bullish. You can see how it's just creating buy candles with a lot of rejection, buy candles with a lot of rejection. It's going up, but it's struggling while it's going up here. And we have not had any proper correction. Now, looking ahead, we still have another area of interest that this market is probably heading to on the daily time frame. You see this order block here, a movement. Then, however, we are going to be expecting like a correction anytime soon. I mean, the market is reacting to something here, and then you can see this kind of rejection, one rejection, two rejection. So this might be that point where the market is going to give us the first major pullback. First major pullback back into where this is a resistance stone support area where this market will pull back into for like a shallow kind of retracement, right? We might have a mid-range or deep retracement, but at least this is let's consider the shallow retracement first because it is the most obvious retracement. So if the market is going to pull back anywhere from here, so we have a destination right here. So I'm gonna drop down to 4 hour now and look at this. Now on the 4 hour time frame, we have the range. The market is currently like slow in this area, right? Ranging around here because of this order block that the market is reacting to. And so we're still going to break down time frames to see if there's going to be a change of character around here to join in for a sell, right? Like a correction sell. Because I mean the market is forming a rectangle here, just moving sideways, like a sideways market. So inside here, we're going to see the price action because we've already mitigated this zone. It's either the price action is going to show us that, okay, we're going to have more sales, at least down to this area, because we're looking at the first major pullback on the daily time frame, right? So I'm going to drop down to the 2 hour time frame from here. And yeah, it kind of looks like that. It kind of looks like that because I mean this range is actually very thick. You can see how the market is moving sideways from this area, and then now 2 hours I have this valid point here because above this is some tight liquidity here, and this was that point that we drew as our resistance on support. That's the daily time frame range, right? So I'll still drop down to the 1 hour. Oh, this looks good. 1 hour. So the 1 hour does not really have much for me. This lower zone does not have much for me. So this place is still very much valid because of what this cup hold that we have here, this liquidity. Yeah, this liquidity here. And we have this order block here. So I'm trying to see how significant this lower one is because if you look closely, this is where the market actually gave that resistance point, right? Rejected here, rejected here, rejected here before the final push up. So this is more like a pullback for a continuation. So this pullback can be very dicey. It can become a liquidity as well, like a trap, right? So that's why I'm trying to understand the power that this one carries, this particular area, right? Because what we have here is more like a partial mitigation on here. So I'll break down to 45 minutes to see. Oh yeah. So on 45, we can now streamline this down here like this. We can do this, another liquidity point, right? So it's getting more interesting. So I'll see 30 minutes. Okay. 30 minutes has not a clean alignment. 15 minutes. Let me see. Not the clean alignment. Okay, so I think we're going to stick to the 1 hour for now. The 1 hour has everything I'm looking for. Due to this one has been partially mitigated, then mitigated with a body. So this 1 hour is going to be our major bone of contention right now. So if we see a sell from here, a pullback sell, then this is where we're going to join in on the buy, not the one above. So somewhere around here. This is about 8 pip. Now, if you want to be conservative, you can give this more drawing down here, and then we have market back into the zone somewhere around here. And then I'm going to now go back to the 4 hours to look at it again and see whether we're having our continuation from there. Yeah. This high will first be your first TP. However, if you want a continuation, you're just going to have to know whether you're going to hold this going higher or not. But at least this should be your first TP point, like a clean 1:3 risk to reward. So yeah, this is what it's going to look like on. So if you want a tighter SL, you can just put your SL below here, a tight one. But if you want to be very conservative, you can wait for this deeper setup. right in here. All right. But honestly, I think I would prefer this one. This one has, you know, clearer tendencies, clearer, everything just looks, everything is aligning, even though this one has a deeper area here. So if I should move in here from here, I'll, this is the kind of setup that when I join in, I'll break even real fast, real fast. The moment my price moves out, I break even real fast. But this one has accumulated enough liquidity here for this guy to be valid. Enough liquidity for this guy to be valid. So yeah, this is what we're going to be looking at on USD card. Then we're gonna jump into GBP JPY. GBP JPY. I think I have something here on GBP JPY as well. GBP JPY, yeah. Okay, so I was already looking into GBP JPY this morning, and I saw this. Now, this pair has been doing just madness recently. So, daily time frame, we're still very much bullish on GBP JPY, very much bullish. Something interesting is happening, right? So you can see here that we're not going to waste time here. This is the low. This is the low point. We've been having this bullish. Now this whole movement, right, broke structure here, but internally this is the low that caused this internal break of structure and this major structural break. So this low is a significant low, right? And then you can see the retracement happened after this whole like what they call it, a range, then this massive sell happened, right, straight into this structure. So this is where it now gets interesting. From here, this is the zone that the market got into, right? Tapped very well into the zone. Let me adjust this. Remember, this is a daily time frame, right? So it tapped very well into the zone. Now it wicked out. It came back the second time and wicked out. Now this is a clear example of partial mitigation, and I've always taught my students this: whenever you have a partial mitigation, it means that the market has a consistency, or the tendency rather, of coming back the second time, to come and mitigate that place. And if it does that with wick again, it still has a tendency, except it has mitigated with a body close. And this is what we're seeing here. This is the first mitigation into the zone, the second one all with wicks, then the third one with a body close. So this is the point where we know that from here the bullish move has actually resumed. Remember, this is a daily time frame, so now you want to get a continuation, right, to join in on this bullish move. So how do we do that? So you can see here now that after this whole thing, this market closed with a body below, amongst this weak area, right, closing below this low with a body, then engulfing. Now when this candle engulfed it, it created a rather another block here for us to use as a mitigation point for a continuation. Now, because this is a daily time frame, you see I have two spots that I marked here, right? This spot and this spot. Now, this is the open of this sell order block. This is the open of this sell order block. This is like the deeper side of the sell order block, right? The order block opened from top and closed below. So normally you can have a pullback, right? You just see like a wick coming back into an order block and then mitigating it and moving ahead. So if we're going to have that kind of situation, that's why I mark this area. Then we'll now go to the lower time frame and check if there's anything significant around this position, right, around this open of this order block. So we'll now drop down to the 4-hour time frame to see. Now on the 4-hour time frame, it doesn't look like there's anything there. This is the area of mark, that's the open, right? And this is the deeper side. So because from here now we're seeing a new impulsive move, and this is the origin of that impulsive move. So obviously we'll have an order block around the origin, and then this is now open from the daily time frame. So we need to actually seek and confirm, is there anything that aligns with this open, any order block or POI that we're going to use there, right? So if we drop down to the 2-hour time frame again, now on the 2-hour you see it clearly. This is the order block. This order block corresponds with the daily time frame order block open area. So this order block is not going to be left insignificant, knowing the fact that okay, it's a mid-range retracement, knowing the fact that okay, this order block is just hanging, it can be a liquidity, blah blah blah. Yes, it can, but it's going to be a very viable entry area, because imagine you have this, right? you have this. This is your order block. And then this is the engulfing. This is the candle that engulfs it. Usually what happens is that the next candle, when it opens like this, it will come back down to almost like this point, right? The touch of that order block, and then it will weak out. Before you know, what you will now see something like this. It will now leave like a week. So sometimes to leave this week, then it will still come back again for that deep retracement. But this alone is going to be the first major reaction. Now, depending on how we're going to use this particular one as entry, is if this market still brings like a form of inducement for us and then push back up, then we can clearly use this one as an entry to continue going up. This imbalance might be left untouched. It might be mitigated much later. Now you can see how these candles are printing small with wicks, small candles with wicks, small candles with wicks. So this area is a very viable area that you're going to have to look out for. Right? Now let's break it down again to smaller time frames. You can see even on the 1 hour time frame, it is still very much looking alive, right? And it is a mid-range retracement, a resistance turn support area. So it just have a lot, to want to use this area. And then let's see what it looks like on 30 minutes. On 30 minutes, you can even refine it some more down here like this. You can refine it some more. So what we want to see now is the liquidity being engineered around this area. Should this market drop, maybe react to this and move away, then it has given us reason to use this guy, right? Might come back for us to do something like this. And then if you go to the daily 4 hour, this is what it looks like. Sorry, let me just delete this. Then let's go to the daily time frame. This is what it looks like. So we're coming back towards this point on the daily time frame. So yeah, I'm going to be significantly waiting for areas like this to happen. So I want to take my buy from here. Then if I have a push from here, like I just said in the other pair, right? It will be easier to break even faster, just in case this market wants to use the deeper retracement area and move. But it is most unlikely that we might have that deep retracement, because from the higher time frame, we are already set to start that push, because I mean, this market has been ranging and delaying around this area. So now when the momentum comes, it may not get as deep as we want it. It may use this top and just push ahead for the next impulsive move. Yeah, so that's that on GJ. So on GJ, I'll be waiting for this market to, come to this zone, this 4 hour, this 1 hour zone, rather, not the deep retracement. So this is my zone right here. Okay, so that's pretty much it. So I'm waiting for gold. I'm waiting for BTC. For those who are on this silver, if you're on it, that's good for you. If you want to wait for the deep retracement, that's still good, because like I said, this entry will be a lot more better for silver. And then for BTC, we're still on the wait, right? We're still on the wait for BTC. Then for gold, this is like the major one I'm actually. Oh, this is like going to be my trade of the week. If I should get this entry here, it's going to be really good. This one might only this trade. If this trade plays out the way I want it, this might be my only trade for the week as well. Like I, I usually put this kind of TP here. This is about 700 pips, but I mean, you probably might even hold it beyond that if you're ready, because when this market wants to move, it's definitely going to break out of this point. And let's say this market is coming down at least back to this breaker block area. What do you expect? How many people will that be? So if we get an entry from here and we're trying to hold all the way up here, this is going to be like 1,100 pips. So this could be enough for me for the week. Should I get an entry from that particular zone? All right. I hope we're good. We're set, prepared, and ready for the week. So try as much as possible to reduce the number of trades you take for your own sanity. The goal is to make money, the goal is to make profits, but remember that the first rule before making profit is equity protection. You need to first protect your capital, protect your mind, protect your mental health, right? So don't chase the market too much. But at the end of the day, it depends on the kind of trader you are. Some people are very comfortable trading 5 minute time frame, 15 minutes, 1 minute. Please, can you drop the setups? Sure, sure. For the gold, I've dropped the gold already. Let me drop the silver for you guys. I'll drop the silver as well. But for the gold, I have dropped that already on Telegram. I'll drop silver now, and then I'll also drop the BTC. Yeah, I'll do that. So, like I said, it all depends on the kind of trader that you are. If you are comfortable trading smaller time frames, then you have to know that you have to be on your screen every time, monitoring, looking out, and you have to be ready for all the noise that it will come with because the market will always, go up and down and all of that. So just brace up, get ready for the week. Once market gets active, I will still announce it. Once I get activated, I will still announce it, and then you can follow up as well. All right, this is all we're going to take for today. See you guys next week. Bye.